Crude oil has been a great market for trading so far this year. If we look at some of the trades done when we've done recent videos, we've clocked up almost £1,300 worth of profits since the 5th of Jan. But given just how it's moved over the last week and for February as a whole, are we getting near to what has to be a top and a major sell-off for the price of crude? I thought we'd start off with a bit of a bigger picture view for crude oil. So the time of recording, it's trading above $57 a barrel at the beginning of the week. We haven't been at these levels since the 21st of January last year, 2020. And you can see the size of the moves, particularly since November. We had that move briefly below $34 a barrel. And again, just into February, it's gone up every day so far in February. Clearly, markets don't carry on like this forever. So are we getting to the point where crude is going to roll over? Or actually, do we just need to keep on buying the dips when it comes to the price of crude oil? Let's take a look at those trades again. So we've got trades running on crude from the previous videos we did, and I'm going to look to take another trade again this time around in crude oil. The question is, long or short, but so far, the last trade we did, we bought in at 52.45 with a stop a couple of dollars away. Clearly the price has moved higher since then. That trade needs some attention. So what I'm going to do, I'll talk a bit more about what's been driving it, what to be wary of when it comes to crude. Then we'll come back onto this, look at it in more detail, see where I think the next move is, and set up the next trade for crude oil. Hello, I'm David Jones from Capital.com, and I thought it was time for an update on the price of crude oil. As you saw there, just continuing to push higher. Quite an incredible performance so far this year for crude. So as usual in this video, I'll talk about what's driving it, what to look out for. Then we will jump back on the platform, take a look at things in more detail, adjust the existing trades, and see if there's a new trade to do. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it helps support the channel. And we now do these regular live streams, 2:30 UK time every Friday afternoon. A look back at what's been moving over the week and a look ahead to what to watch in the week to come. If you're subscribed with a notification, alarm bell clicked, you'll get a notification just as we're about to go live. Right, let's catch up with oil. So the strength continues. Really strong start to the year. Just for the year to date, the price of oil at the time of recording is up about 18%. And we're not even a year and a half into the year so far. So this means it's hit its best levels since January 2020. So it surpassed the high just before everything fell off a cliff, February, March last year. And we're back up to 13-month highs for the price of crude oil. I think we have seen some fundamentals helping this along. Last time around, we had a large decrease in the crude oil inventories in the US, the amount of oil effectively that gets stockpiled. That fell larger than normal. That helped. Plus, of course, we have these ongoing OPEC plus production restraints that have been in place for a while now. OPEC trying to do their bit to control the supply of oil and keep the price a bit more stable. I think from a world economy point of view, there is a lot being pinned on the coronavirus vaccine. So the expectation is that it's probably not going to see the effects of that until the second half of the year from an economic point of view. But the hope is, as the world gets vaccinated, we see the economy pick up and increase demand for oil in the second half of 2021. So there's, I think, clearly an element of looking ahead going on in the oil market. But the risk is, as we've seen with this, the virus over, almost 12 months now, if we see resurgence or we see further new strains, are we going to see further lockdowns? So this is really, I think, the shaky part of the economic outlook from here. And this is something that can make some people think, well, hang on, has the price of oil really got ahead of expectations? If we look back to that November low, when it traded briefly, I think below $34, look at where we're trading now. The price has rallied by 70%, almost 70% since that November low. That's a massive move in a major market like oil. So with so many unknowns still about the world economy, has the price got ahead of itself? Is it time to go short? We'll take a look at all of this. But first of all, let's talk about the levels to watch. So I've had to revise my levels as we've seen the market move higher. Next obvious resistance, I think, $60 a barrel. Psychological level, really, but that could be the next place, the next target if we're looking to go long, and perhaps where we may see it running into a bit of trouble. Lots of support left on the downside on this move up. We'll look at it in a bit more detail, these levels, in a second. The first of these for me, the lows from earlier in February, just ahead of $55 a barrel. Let's take a look at it. Let's put some color on these numbers and see if there's a trade to do. So if you've watched any of our videos before, you know I'm a big fan of trading with the trends. And here we go. This is the trend that we're looking at for crude off the lows in April, when it was, $10, $11 a barrel in the cash market. And here we are now, $2.50 or so away from $60 a barrel. So we're gonna come back into this, and probably the bit of the trend I want to focus on is what's been going on since November. So we'll take a look at that in more detail when it comes to setting up our trade. Let's take a look at the indicators. Not surprisingly, overbought down here on the RSI. This is the problem, of course. As I often say, in strong trending markets, if we're doggedly following the RSI, it will give us an extreme reading too quickly. So I'm not quite sure how much the RSI is adding in at the moment, but given how overbought it is, this is the most overbought it's been pretty much since June of last year. And then into the summer, we did have a period where the market went sideways. So perhaps we do want to be a bit wary of that the RSI is this overbought. Looking at the MACD down here, the last signal we had on the MACD was just at the beginning of February. MACD crossed over and went long, gave us a buy signal. So that is going with the trend at the moment. But when it comes to planning a trade, let me just focus on what's been going on since November. I think when it comes to targets, I mentioned $60 as the next psychological target. That does tie up with the highs from sort of mid-Jan of last year. Then after that, we're really gunning for the 2020 highs as a whole. They're up just above $65 a barrel. So if we were going to be really bullish, there's still a lot of potential upside from here to get back to where we were in the highs of January. But let's zoom things in and take a look at the move since November. So here's the move off the November lows. Let's focus on the price action for now. That's an okay trend. I think you could argue that the touches here in December was the second, third touches of the trend, came back to it again in February. That trend line is coming in currently around $53 a barrel. So for me, considering this trend is still up, I'd still want to be a buyer on weakness. It's only if we start to lose, I think these old lows, January the 22nd, around $51.40, would I start to think that actually this trend is really in trouble and we're going to see a much deeper sell-off. So for now, I would still be inclined to be a buyer of oil. The only question is, where does my stop loss go? And it's quite hard. I've got those existing trades at the moment that I need to move the stop losses up on, but it's quite hard when it comes to setting up a new trade when we've seen it just rise for the last almost 2 weeks now to know where the stop's going to go. So what I'm going to do, let's take this down to an hourly chart. I do want to put a trade on. I want to buy. The only question is, do I wait for a sell-off or do I just jump in now? Let's take a look on the shorter term chart. So we've got our hourly chart up now going back to the 28th of January. And clearly the price has really taken off since the beginning of Feb. We've had this great run up, a tight trend line that looks something like that, coming in around $57. On the hourly RSI, again, pretty overbought, maybe a bit of bearish divergence up here. But for now, I want to focus on the price. Let's get rid of the indicators. So lots of short-term support. Probably if I was a buyer now, the closest I would want my stop would be the other side of these 5th of February lows, around $56.35. If I was going to give it a bit more room, perhaps I go just to the 4th of February lows, around $55. So the trade I'm going to do, I've got some existing trades at the moment. We'll have a look at those in a second. I want to go with the trends, but what I want to do is buy if we see further strength from here. So I am going to buy a breakout. It's a breakout trade. We're going to set that up. Let's do that now. So the most recent high at the time of recording was set between 8 and 9 a.m. UK time when the market traded up to $57.54. That's the level we're looking at. So I'm going to put an order in to buy 57.75. So I want to see the market punch 20 cents through that high. And if it does that, I want to buy in at 57.75. When it comes to a stop loss, I'm going to set it actually halfway between the February the 5th low at 56.35 and this, what I think is a much stronger low at 55.19. So some quick maths in my head. I'll go 55.70 for a stop. So I'm a buyer at 57.75 and a stop at 55.70. Let's set that up. So I'm ready to go. I would like to buy 167 barrels if the price trades to 57.75. If it breaks out again, you can see that there on the chart. If that order gets filled, put a stop loss at 55.70. So roughly halfway between these 2 points. So if we do see it break out, I'm not expecting a deep sell-off. And with that stop at 55.70, buying at 57.75, my risk is the usual £250. Let's send the trade through, or send the order through, I should say, to sit there and see if it gets hit. So if I go and look at my portfolio and go to orders first of all. So we have an old crude oil order in to buy at, 44.50. Not so relevant these days. Let's get rid of that one. And here's my latest order to buy in if the price falls to 57.75. So we'll leave that one in there. And if I look at my existing positions, these are the other trades that we have running on oil. So the one from the 5th of January is up about, £700 on that one. We're up 550 on the one from the 25th of January. To make it simple, let me move my stop loss on all of these to where the stop loss will go on the new trade, 55.70. So this way, I'm locking in some profit if the market does fall from here, but I'm also giving it some leeway if we do see it push higher to try and clock up some more profits. So let's see what happens next in crude oil. I am getting perhaps a bit wary up here of the size of the run that we've seen, that we are due something of a sell-off. Let's see how this week pans out. If we see further strength from here, I'll be buying in again. If we see a deeper sell-off, I'll be taking my profits and we can look at it with a fresh pair of eyes. Let's see what the next few days brings for crude oil. That's it for the update this time round in oil. We will see if it continues to power higher or whether there's a top coming. But from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.